This is Mark Anthony with Mercury Time-Price Analytics, and welcome to our weekend review video for algorithmic futures trading of ES, NQ, bonds, and crude oil. Boy, we have a lot to talk about this week. This video is the companion video for the weekly review printed article that we have on our website. This video is being recorded on Saturday the 22nd, about 10:30 in the evening. If you'd like to access the printed version, just go to mercurysignals.com. And when you get to our homepage, just click on Weekly Report. And there you'll find each week's report, including last week's report with the mean kitty, adorable cat. We've got 4 cats and 2 dogs. But if you click on Mr. Robot, you will find the article. And if you're in your late 50s like me or older, you probably remember the iconic TV series from the 60s called Lost in Space. It ran from 65 to 68, and one of the characters was a robot called the Robot. And the robot had this really strange way of being very confused, spinning around, flailing its arms and saying, "This does not compute, this does not compute, this does not compute." And as I mentioned in the article, I think the robot was programmed by a central bank governor. So let's talk about what happened this last week. Part of what happened last week was not unexpected. If you've watched any of our videos for the last few weeks, I've been very adamant about the extreme irresponsible behavior by financial TV pundits. I'm not talking about the hosts, I'm talking about the guests that come on, many of whom pound the table day after day, buy the dip, buy the dip, buy the dip, buy the dip. There hasn't been a dip yet. I mean, there hasn't been a meaningful dip recently. I mean, we've had these fast moves down, but where is the dip in the last couple of weeks until what we saw here? And, you know, this term, you didn't hear this so much this week, but last week you heard, you know, we expect a V-shaped recovery in Asia. Oh, really? When did you become an epidemiologist? Part-time, you know, full-time financial pundit, part-time epidemiologist. And obviously you can note the sarcasm in my voice. But what these folks have been doing is nothing short of financial malpractice. Because these folks are coming on TV telling you to buy the dip, while at the same time, back at the shop, many of their firms were easing up on their long exposure, if not outright shorting it. But they're telling you to buy the dip. Now, let's go back to Monday. Monday, we had the holiday shortened trading session. And then between the 1 o'clock Eastern Time close and the 6 o'clock Globex futures open, you had Apple pre-announce earnings. Seems that due to supply chain disruptions, what's happening with the coronavirus in China, between the supply chain disruptions and expected reduced iPhone sales, that their earnings are going to be down, impacted by the coronavirus. Who knew? Who didn't know? V-shaped recovery. Really? And we're going to talk a little bit more about the craziness that happened even after that, Tuesday morning and into Wednesday. So, you know, this whole nonsense about a V-shaped recovery, I don't know about y'all, but this looks like an inverted V to me. I'm not seeing a V here. I mean, you had, well, I guess if you call what happened Tuesday a V-shaped recovery, but how'd that work out? So let's take a look at the charts. We've got a whole lot to cover this week. We had this move down after the Apple news into Tuesday morning, 11:30 Eastern Time. You've got the European close. That's right where it found support. And then all of a sudden, nothing to see here, folks. Move along, boom, right back up into the 33.90 area. Well, the problem was there is no follow-through on these new highs. No follow-through. No follow-through. No follow-through. No follow-through here, 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 here. You know, here, and then you get this move, which was Wednesday evening Globex, that just runs all these stops. Well, here's the problem. The reason you're not getting follow through is because the algos aren't finding a lot of stops up here, which means it means a number of things, but one of them is options market makers, they're not hedging 100% this risk because they see the same thing as the algos are seeing. The algorithms aren't finding stops to run. And what these algos will do is if they make a high and it doesn't extend, that tells them there aren't stops up here to run. And so then you get this action. So let's talk about what happened in here, because I want to talk about semiconductors. One of the dumbest things I've seen in a long time is that you had Apple warn here, and then the semiconductors, day and a half later, boom, they're up here trying to make a new high. What's inside of an iPhone? Semiconductors. Look around the room you're in. Look at all the things that are loaded with semiconductors. The car you drive, loaded with semiconductors. So, how badly the coronavirus tragedy affects consumer demand, we're still going to have to see. But I'll tell you one thing, it's certainly going to affect supply chains. Certainly going to affect supply chains. And so I cannot understand why semiconductors are trying to ramp. I mean, that to me was just shorting semiconductors may have been the greatest trading gift I've seen in a long time. But let's dig into what we had here. Algorithmically, we expected a top, if not in this area, in the 3390s. I expected it to top out just above 3,400. I've got several predictive tools, and we don't make a lot of predictions here because predictions are worth what you pay for them. You don't trade off projections, you trade off what the tape is giving you. But I had a number of what have always been very reliable tools that kept showing the number 3402. Now, it would be it would be out of the ordinary to have a move above a roundy, and by roundy I mean multiples of 100. So you got the roundy at 3,400. It would be out of the ordinary to have a move above a roundy that then failed. But by the same token, typically if something trades a 93 handle, it's going to do the roundy, and it still might. But what is really unusual is to have a breakdown this close to a round number. I mean, they probably had the S&P 3,400 hats printed, ready to go. They had the visor broken in, everything. And then, boom, this happens. So let's talk about what happened that preceded this. Let's go over here to the chart. And I know there's a lot of stuff going on here. This is sort of the master algorithm chart that I've got on my desk. So here between 33, 72, and 76, you've got just a massive amount of algorithmic pivots. And that's why when this broke, it broke so violently. But going back to Monday, what you had up in here was you had a lot of pivots that were right in this area, right near the high. And the reason for that is as we've had this relentless drift higher, each day the algorithmic pivots move higher and higher and higher and higher. And at some point, that bar is just unsustainable. Now, this structure that we had here, and because this is just crazy busy, we'll take a look at some of these other charts that have that stuff pulled off. Here we go. So what you had up in here just above 3390 was the same thing you had on January 22nd around 3330. You go back on your chart and look at where ES was trading right before the day session opened on January 22nd. It was like 33.35 or so. We called that a short on our subscription service. It was like 33.35, I believe, right before the open. Why? because it was the same setup as here. All these pivots had moved up so far that if the bulls didn't take it immediately higher off the open, all sorts of stuff was going to break. You go back and you look at January 22nd, it wasn't that big a move in terms of outright handles or outright percentage. It was 33.35 to like 33.02. It was only about a little over 30 handles, about 35 handles. But the problem was, and we wrote about this, I put it out on the videos, that move did substantial technical damage. Why? Because you had so many of these pivots up here that move from 33.35 down to 33.02-ish on January 22nd did enormous technical damage. So what did it do? It went right back up to that same spot 2 days later on the 24th, and then boom, it breaks, and now you're talking 80 some odd handles down. It's no different than what you've got right here. This is the exact same setup. If you change the dates and make this January 22nd and make this January 24th, the Friday, same kind of thing. Now, you had this breathtaking move here. It was about 50 handles in about 45 minutes. This day, the trade recommendations on our service booked 84 handles. You're probably wondering, how do you book 84 handles when it moved basically 50 from top to bottom? Well, the way we teach risk management is you trade in thirds. So what does that mean? Well, based on your account size and risk, it might mean 3 micro minis, or it might mean 6, or it might mean 3 minis. But when you're trading in something in multiples of 3, what that allows you to do is when the trade starts moving, 2, 3, 4 handles to the good, well, then you take the first third of the position off, and that way you're getting risk out of the trade very quickly. Well, there are times when you play it right, because we were short right in here, and it's all right here on, where was Thursday? Here's Thursday. So Thursday, we had first trade of the day, short entry, 33.81 or better. And this one, we legged into this trade instead of putting it all on at once. So +4 on the first third, and then it reversed, and we were stopped out. Okay, so it ends up being either a wash, or maybe you make a handle, maybe you give up a handle. And then we legged into this position again. So at 11:02, we've got a full position on 33.86, and then splat. So the first piece, and normally again on the first third, you're looking for 2, 3, 4 handles, 20 handles on that first piece of the trade. And they were coming in big chunks, and so at the end of the day, it was 84 handles. Now, how do we know where to take profits? Let me see if I can find the right chart here. Here you go. So this was Monday and into Tuesday. Well, we had one of our proprietary algorithmic regression lines right here. It came right down into it within a handle. And so, you're taking the position off in portions, and then when it comes down to something this significant, well, then you take the last third off. The last third is what we call a runner. Now, this is downright amazing. So you had this move down on Thursday, 50 handles in 45 minutes, that stopped within 1 tick of this Mercury band that was put on the chart the night before. The Mercury bands are updated every evening. So the Mercury band was at 33.3881 because the algo is fully decimalized, okay? Now, the low was 33.39.25. So just a tad more than 1 tick, not 1 handle, not 1 round number, 1 tick. 50 handle move in 45 minutes that stopped within a tick. Now, on that day, where did it start? Well, up here at 84.91 is the Mercury band, upper band. Well, that's what broke. See, right here. That's what broke. The upper band broke, and it came down within 1 tick to the lower band. Math works. Our system works. We literally, and I'm going to keep saying this till someone proves us wrong, we literally offer the most precise algorithms anywhere institutional or otherwise. I mean, are there institutions that had an algorithm that caught the break and a subsequent 50 handle move in 45 minutes that stopped within a tick? I'm going to go out on a limb and think, well, you can't get any more precise than that. But enough of that. So that's how you book the kind of profits, because we have very, very tight risk management, and we have very, very tight, very precise algorithms to indicate where to take profits on the way down. Now, you saw this regression line. This held on Tuesday. Look at the fast move because it didn't hold on Thursday. So this week, and I say this on every video, someone's trying to sell you a subscription and they can't show you real-time accountability, forget about it. I mean, the technology is there that anybody that runs a trading service can post these kind of things that are documented in real time. So 246 handles this week. And this is a good time to share the disclosure. Past performance is not indicative of future results. We don't promise these types of results in the future, tomorrow, next week, next year, but I can share with you what we've done in the record. One losing day in December, less than 3 handles. One losing day in January, less than 3 handles. One so far in February, a little less than 4 handles. But these recommendations that are right there on our website booked over 600 handles in January and 246 handles this past week for a service that we charge you what amounts to a little over 1 handle. An ESE mini handle's $50. Our service runs you $68 a week, billed bi-weekly. We don't even bill you a month in advance. So if you want to try out our service, it's going to cost you $138 for 2 weeks. $68 a week, a little over a handle. 246 handles this week. And again, we're not promising that that's the typical return, but I will promise you this: we teach risk management better than probably anybody out there on a subscription service. So this is what broke, and you can see this is the weekly pivot. This also broke. So 33.81, it came down to the 2-week pivot on Friday, which was right here at 33.29. Now, let's talk about the chart damage that was done. All right. So here we get into some not short term, but between short term and intermediate term algos. You can see how precise this is. See, it came down here precisely, came up, couldn't make a new high, came down and broke. Okay, you see that? And then boom. But it also took out this longer cycle pivot. So again, these are short to intermediate term on this chart, okay? Now, let's move out a little bit longer. Now we're looking at intermediate term pivots. And again, the precision of these algos, what we do is a combination of very, very, very deep esoteric WD Gann principles, stuff that you won't find unless you dig really, really, really deep into the publications you can only get from the Gann family authorized publishing company. Won't find it anywhere else. And what's interesting about our algos is I didn't base any of this on Gann theory. This was based on proprietary formulas that then when we started digging into Gann theory, we were like, oh my goodness, there it is. So part of this is based on very, very esoteric Gann theory. Part of it is based on cycle work, which again, this was all our own, but it turns out that Charles Angus Hurst, who's one of the most brilliant mathematicians of the 20th century, and I'm not saying I have 1,000th of the brain acuity that man had. But we came to find out that after this was built, there's another thing. Conforms with some of the most esoteric Gann principles, conforms with Charles Angus Hurst's cycle principles, and there's a whole lot of other secret sauce in here that we'll never tell anybody about. But that's how you get this level of precision. So anyway, you break this intermediate term pivot here too. Now let's go out a little bit further. And that's what we just did. Now we go out even further. These are even longer cycle pivots. I wanted to show you this because this is what you have to keep in the back of your mind for this coming week. This entire structure starts to break. It becomes in jeopardy if you take out Friday's low. Then the next key area is right here around 33.11. Now these are very slow moving algos, so it's going to be right around there for the next couple days. And then the big number to watch is 32.73, because you break 32.73, this whole structure breaks and confirms all this is nothing more than a blow off top. And boy, oh boy, you better hold this, or then you got some problems. Because if this pivot breaks, and these are going to move a little bit each day, but if this algo breaks, then you've put in a very significant intermediate term top. Doesn't mean you can't make new highs. Anything can happen, but it has a potential, and you'll always have ups and downs, but you break this, and you don't want to be buying the dip. Let's put it that way. You'll get these moves down that spike, and you can make really good money on the reversal. But when you're trying to buy dips in between these algorithmic levels, typically if one breaks, you're going to seek the next one. So you don't want to be buying dips in here. You don't want to be buying dips in here. They can work, but man, you better be nimble. Now, I want to make sure we didn't skip a chart because, okay, that's the one we just looked at. So let's talk about semiconductors. Here's the break on Monday. So last week you had this high, 152. That was Friday of last week. And then all of a sudden Monday, Apple warns and you're down to in the 147s. Couple percent. And then all of a sudden the next day everyone forgets that iPhones are loaded with semiconductors, and so is everything else that's around you. And so the next day we're up doing new highs. On what? On what? This could be one of the dumbest things I've ever seen. I've seen markets do a lot of crazy stuff. I want you to remember this chart when we start looking at bonds and yields in a minute. Well, then reality set in and this whole structure got taken out. Now, there's going to be people next week telling you to buy the dip too. We go up 10 handles on Monday, everyone's going to say, buy the dip, buy the dip, buy the dip, buy the dip. Well, that's not what semiconductors are telling us. Because it looks to me like semis want to fill this gap down here that's like in 138 handle. Now, if it does that, well, then you're talking about an 8.5% move off the high. And it can do that pretty quickly. I mean, you can see this next week. You could, you might not, who knows? But this semiconductor chart is not telling you to buy the dip. Semiconductors usually lead the market up. They usually lead the market down. If there's going to be a correction, it's telling you right here. Correction warning. Now, probably the thing that had me scratching my head the most the last few weeks is how anybody can pound the table to buy the dip with what we're seeing in bonds. And before I do that, I want to show you just a longer term chart on semis. You can see all kinds of intermediate stuff. It starts breaking with a little bit lower action than we saw on Friday. Now let's talk about bonds. The stock market can be manipulated. I don't like using the M word. I usually use the word shenanigans. But here's what's happened. As more and more volume goes off the exchanges in what are commonly referred to as dark pools, and the word dark doesn't mean conspiratorial, it just means that institutions, large hedge funds, they can trade off the exchanges. That leaves less and less volume on the exchanges, which, oh, by the way, makes these ETFs much, much more risky. But that's a whole nother topic. But as more and more volume moves off the exchange, that shifts more and more importance to options market makers, and things like gamma and hedging, and that's for a whole nother video. But because of what's happening, you have a self-fulfilling bid where you've got excessive call buying like we've had, which does things to options gamma, and so these moves become self-fulfilling until something breaks. It's like my mom used to say, run around with scissors and keep doing that until somebody gets hurt. Well, the buy the dippers are running with scissors. Okay? So let's take a look at bonds. Now again, I'm going to say the same thing that I've been harping on for 2 weeks, 3 weeks now. How can anybody come on financial TV and tell you equities are a buy the dip when you've got yields moving from the extreme top left of the chart to the extreme bottom right, getting near all-time lows, and you've got bonds going from the extreme bottom left to the extreme top right? What was it, 165 on Friday? See, you can't manipulate the bond market. Bond market's too big. You can manipulate the equity market. You can do all kinds of shenanigans in the equity market if you have enough money and you have good enough computers. Can't do that in the bond market. So what's the bond market been saying? The bond market's been saying, there's something wrong. This is not good. Look at how far this support goes back. Weekly support back to April of 2013. April of 2013. What was going on in China in 2013? What was the Fed doing in 2013? Massive liquidity being pumped in. You have weekly support going back to July of 2012. Broken. May recover it, but for now. And now you're down into support all the way down. I mean, who thought we would see this? And let's just look at a close-up, a little bit closer look. And here's the point. Has there ever been a more dangerous time to buy the dip in equities than what this chart's telling you right now, this bond chart? Ever. And for all the chuckleheads that are on TV that had the nerve to come on the halftime report on Friday, Josh Brown, and get indignant, literally calling people idiots who sold last time that there was a little bit of a correction. You're calling your viewers idiot, Josh Brown. Idiot. Really. Look in the mirror. And I'm sorry to make this personal, but that is idiocy. You call people an idiot for having prudent risk management? Call people an idiot for taking a little off the table when you're at the third standard deviation above the 200-day moving average? I would say that makes sense. I don't know. Call me crazy. So, yeah, I've been harping on this, and I will call people out that are doing that because it's financial malpractice. I don't know how you do that. But this kind of stuff, buy the dip. Tell me in here where I should have bought the dip. Where? This happened in 45 minutes. Where should I have bought the dip? At Friday's low? Anyway, it makes me angry because there's a lot of traders who listen to that. There's a lot of traders get hurt by that type of maladvice. Let me give you a suggestion. If you have the TV on while you're trading, turn the sound off. I have a TV on in my office. Most of the day I've got it tuned to Bloomberg. There's a couple of shows I really like on CNBC, but most of the day it's on Bloomberg. Why? Because out of the corner of my eye I can see if there's a news alert. But the sound's off. Don't listen to these people. They'll come on TV and tell you to buy the dip while back at the shop they're selling into every one of these. They're selling into every single one of these blips up while they're telling you to buy the dip. And the most laughable thing was here on Tuesday, Wednesday, they're telling you, oh, we're picking up some semis here. Baloney, you're picking up semis. You're not picking up semis, you're selling them. Anyway, enough of that. I just want to take a moment to talk about what we offer, and I'm going to make this quick. 247 handles last week. Again, past performance. You know how that goes. over 600 handles in January for a trading service that we charge you a little over 1 handle a week. If you trade the E-mini, it's $50 a handle. The service runs, it's like $68 and change a week, a little more than 1 handle a week. You don't have to pay monthly, we bill bi-weekly. So it's like $138 for 2 weeks. You can cancel anytime. We do give you a lifetime rate lock. Rates are going to be going up soon, but you can quit whenever you want. You can stay as long as you want. The rates will never go up from the time you join. If you go to our website, mercurysignals.com, we have 2 different trading services. We have one for ES and NQ, and we have all these algos. I mean, the amount of algorithms that we have, and you don't have to try and interpret this chart. This is sort of the master chart for me. We have a live chart that runs on Zoom, and it runs 23 hours a day from 6 o'clock in the evening Globex open to 5 o'clock the next day. Every day you get a code, and you just plug that in, and you've got the live video on your computer, tablet, or phone. You've got me on the mic all day long walking you through the trades. The trades are posted as quickly as possible on the website, and there's times when the market's moving fast where I can't take eyes off it, and it'll take a couple minutes before these are posted, but usually these are typed in right when I call them out for the most part. But for example, when the market first opens the day session at 9:30, I can't take my eyes off the chart. Those are typed in, within a couple of minutes. But everything is there. It's full accountability. And although we can't guarantee results, nobody can, we will teach you how to manage risk like a pro, and that in and of itself is worth many, many, many times what our service costs. So we do hope you'll check out our website, mercurysignals.com. The other service, you got the ESNQ service. The other service is bonds and crude oil. That we'll discuss bonds a little bit more in depth on the videos this week. I do not understand why more folks don't trade bonds. It can't be manipulated the way this is. You got to be really, really good and really, really nimble to be shorting this. Because you have to know where your risk is. You have to wait. If you're going to take a short here, you have to wait until it gets within just 2, 3, 4 handles at the most of where that resistance is. So if it breaks, you put that stop in, very quickly within a few handles when you're wrong. Pardon me. But please do check out our website, mercurysignals.com. We thank you so much for taking the time to watch these videos day in and day out. God bless you. God bless your family. And we hope to see you again real soon. Take care.